Hi friends. So today I'm going to discuss on a topic called as why to invest in gold. This is in continuation to the financial planning series videos which I've been adding in my channel. We had one on why should you invest in mutual fund. We also had one on something called as fundamental analysis of stock. How do you find a stock for long-term investing? Today I'm going to talk about gold. I think most of you could have invested in gold, or you may be using gold for your consumption purpose. When I say consumption purpose, you could have you could have bought some physical gold. Technically it's also an investment. You will understand as I proceed. Now, why should I get into gold? Gold is something which is able to give very healthy returns. It is something which is able to give very healthy returns. It can give you significantly higher inflation adjusted returns. Your inflation could be at around 6-7%. Gold over the last 20 years have given a return of 12.5%, which is significantly higher than your inflation. So gold can help you in growing your money over the longer run. So if somebody had invested in gold 20 years back, and if you look at the value at this point of time, it's a significant growth. A CAGR of 12.5% would have led to your values becoming something like I think 7x or 8x of the value it would have reached. So it's a significantly high return for a longer period of time. So that is something which gold can give you. Also, what gold does is it is considered to be a safe security. Though it has its own set of volatility, but it is considered to be a safe security whenever there is financial uncertainty. Whenever you see uncertainty in the market, which I'm going to talk about in some time, whenever there is uncertainty in the market, you would see gold doing really well. For example, in the last year, when COVID had come, that was a scenario of uncertainty in the market. When that uncertainty started, you could see equities crashing a lot. Equities, your Nifty, Sensex, all of them had crashed. But that's the year where gold gave significant returns. So also, be it your whatever in the past history, if you go back to 2008, when Sensex and Nifty would have crashed a lot. So during that period also, gold would give you significantly high returns. Another major advantage of gold is it's a highly liquid asset. It's a significant benefit of gold, because assume you need some money and there's an urgency to get money. You could invest in mutual funds, you could invest in equities, you could invest in land, you could invest in fixed deposits. All of them have liquidity. It's not that they don't have liquidity, but if you want to come out of stocks, you may have to come out at a time which may not be the right time to move out of the market. So if you are trying to move out and you have a significant investment in a stock, you may have some erosion in value, and also it takes 3-4 days for you to get the money. When it comes to equity shares, mutual funds take 3-4 days to get the money. But gold is something which can give you money on the same day. If it's physical gold, there are other forms of gold investments which I'll discuss about, but physical gold is something which can give you money on the same day. That's a significant benefit of gold. Also, what I have seen is things which have happened in the market. You can use this as a collateral. To get jewel loans, which are at very attractive rate of interest. If you go to banks are ready to give you jewel loan at 7.5%, 8%, 7%. So which is very attractive rate of interest as compared to your personal loan rate. So you can, and the process is also fairly simple. You don't need any income proof. You don't need any of them, because you are giving collateral of jewel. So when you give jewel as a collateral to the bank, it is possible to get money at a very cheap rate of interest. So two things. If you want quick money, you can sell gold. You don't want to sell gold, use it as a collateral. And get a loan at an attractive rate of interest, so that you can continue to hold on to the gold. Now I'm going to talk about what is this financial uncertainty part and how gold has helped. Now, if you look at this, there are periods where Nifty has given significantly negative returns. 2008. Nifty had given a return of negative 51%. Negative 51% is the Nifty's returns. But look at the same year, gold has given 15.74% return. Similarly, Nifty struggled here. gold gave the highest returns. Gold gave the highest return. So whenever Nifty is doing bad, gold will do really well. Whenever Nifty is doing bad, gold is expected to do really well. 2020 is an year when Nifty struggled initially. Nifty had a huge struggle initial phase. At the initial phase, there was a significant struggle of Nifty. So whenever Nifty has struggled, you have seen gold giving significantly high returns. That's the benefit of gold. Gold will give you very, very high returns when there is uncertainty. When there's uncertainty in the market, if something is going to become uncertain in future, you will see at that point of time, gold shining. Gold will start shining whenever markets are uncertain. 2008 crisis, in 2011 it struggled. In 2020 also market did struggle in 2020 also. In that period I could see significantly better performance from gold. So that's the biggest benefit. According to me, gold gives diversity in your portfolio. Gold gives diversification benefit in your portfolio. So you should have a mix of gold, equities, mutual fund, fixed deposits, debt instruments. So there's a mix of everything. There should be a mix of everything, and gold is something which cannot be missed out. Gold is a critical part of your portfolio. It will help you when you were struggling with weak returns in 2008. It had helped. When you were struggling in 2011, it had helped. When you were struggling in 2020 also, initially when you had struggled, by the end of the year markets did revive back. But when we were struggling in markets, when we were struggling in equity markets, you could see gold giving significant returns. So now you have understood it is critical to invest in gold. It is very much critical to invest in gold. Gold should be one of the asset classes in which you make your investment. So you decide how do you want to distribute your 100 rupee. Something can go to equity, something can go to debt mutual fund, something can go to equity mutual fund, something can go to gold, something can go to FDs. So you can have multiple purposes where you can put your money. Something could be in the form of LIC. So there are multiple things where you can put your money. Gold is also one of that. And in fact, to me, gold has benefits of healthy returns with liquidity benefit. Healthy returns as well as liquidity benefit. Now, how should I invest in gold? That's a question which a lot of people have. There are multiple ways in which you can invest in gold. One is physical gold. There is a physical gold which people can invest in. You go to a jeweler shop, buy an ornament, buy gold coin, whatever you want to do. So that's the easiest way of investing. So physical gold is one. The only challenge I see in physical gold is there are some certain making charges which you end up paying. For example, if you buy gold at 10,000 rupees and you want to sell it the same day back to the jeweler, you may not be able to sell it back at 10,000 because there are certain charges which will get deducted. So that is one issue I see with the physical gold, but it gives you very high liquidity. I think another advantage is liquidity benefit. There is a benefit of liquidity which comes in here. So that's a benefit which you can get with physical gold. So that benefit is there. But the problem according to me is with making charges, and also you have some exposure to risks of theft. So because of which you may want to store it in some safety lockers. So there are certain costs associated with it. But physical gold is one of the way of investing. You don't have any formalities, you don't need a PAN card, you don't need to do any KYC, so all that benefits are there. You go ahead, simply do a physical investment in gold, maybe get a gold coin every month. That's a SIP mode of investing. Second is gold mutual funds. In gold mutual funds, according to me, the biggest benefit of going through gold mutual funds is you will save on this making charges. This making charges issue will not be there, because whatever rate at which you are getting the gold mutual fund, when you redeem it back, when you sell it back, or when you redeem your mutual fund, you will not have this making charges issue. The brokerage or the making charges issue will not be there as far as gold mutual fund is concerned. Also, you can do SIP mode of investing. You can just set up a SIP and you can just stay at home and automatically investments will be done. In a physical gold also you can do a SIP, but you will have to go to the jeweler shop every month, get a gold coin from him. But in a gold mutual fund, once you set up a SIP mode of investing, it will keep buying 2,000 rupees of gold mutual fund, or 5,000 rupees of gold mutual fund, or 10,000 rupees of gold mutual fund, and the returns will obviously mirror the gold returns. Whatever returns the gold mutual fund is getting, it is going to mirror the returns of gold mutual fund. the one challenge I see is there is something called as an expense ratio. Because the mutual fund is being managed by set of professional fund managers, there is a expense ratio which will be incurred. So that is something you will have to take care. But otherwise, gold mutual fund is a very good instrument to invest in gold. They will give you more or less similar returns as to what the gold has been giving. More or less similar set of returns will be given. So it's a very good instrument to invest in. Some people will have challenges in investing in gold mutual fund because you need a PAN, which could be there with most of you. You will have to be done with your KYC formalities. So you will have to complete that and you can just start investing. The other form which I normally advise people to get into this mode, which is called sovereign gold bond. What is a sovereign gold bond? This is being issued by Government of India. This is being issued at some specific price, which is the average price of the gold. The average price of the gold will be there. Based on that price, they will decide an issue price. You can make an online purchase. When you make an online purchase, you get 50 rupees discount. You get 50 rupees discount on purchase price. Also, in a sovereign gold bond, you will get the gold returns. If gold prices move up, your investment will move up. If gold prices come down, your investment will come down. So whatever happens to gold price, the same will happen to your gold bond. Whatever is happening to the gold price. So whatever physical gold was doing, the same thing sovereign gold bond will also do. If physical gold is moving up, sovereign gold bond will also move up. If physical gold is coming down, sovereign gold bond will also come down. Along with that, you will get extra 2.5% interest. So if physical gold is giving 12% returns, sovereign gold bond will end up giving 14.5%. Sovereign gold bond will end up giving 14.5% extra 2.5% returns. That's one benefit. In the physical gold, this 12 can come down to 10 because of making charges issue. Because of your making charges issue, your returns can slightly come down. But still physical gold has its own set of benefits because of liquidity. People do get into physical gold. But sovereign gold bond can approximately give 3-4% extra returns. It can give you 3-4% extra returns. Also, there is no taxation here. There's no capital gain taxation. Whenever you're redeeming your bonds, there's no taxation on that. Interest is obviously taxable, but you still have basic exemption limit of 2.5 lakhs, which is there. So if it is within that limit, interest will become exempt. Capital gain will become exempt because there's no taxation. The only problem is there is an 8-year lock-in. There's an 8-year lock-in. So if you don't want money for a longer period of time, you can get into sovereign gold bond. But if you want liquidity, then obviously physical gold is better or gold mutual funds are better. So 8-year lock-in is there in a sovereign gold bond. So that's a disadvantage which could be there. Also, this you cannot buy as and when you want it, because government will come with an issue. So government will tell the issue dates and you can purchase only on those dates. Last year government made 12 issues. This year government is planning to make only 6 issues. So that's a disadvantage with sovereign gold bond, that you cannot do a SIP mode of investing and liquidity is not there because 8-year lock-in is there. So gold, physical gold has liquidity benefit. It has liquidity benefit which is there. Physical gold will give you liquidity benefit. Along with that, you have an issue with the returns being on the lower side. Returns can be on the lower side because of making charges issue. Gold mutual fund liquidity is also there. You will make decent amount of returns, but expense ratio will be there. You will have to complete your eKYC formalities. Sovereign gold bond is something which can give you very, very high returns, but you cannot do a SIP mode of investing and liquidity challenges will be there. So this is what, as far as your different ways of doing gold investment. These are different ways of doing gold investment. If you have any questions, on why should you consider gold as an investment class, what can be done, you can just contact us on these 2 numbers. Send us a WhatsApp message. We'll clarify whatever doubts you have. So with this, I'll end. I'll continue with the financial planning series. You can also comment on our videos in case you want us to cover a specific topic. Thank you, friends.